Welcome to the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. As we were prepping of what we were going to talk about, I hope we can cram it all into this segment because there's a lot of factors that are weighing in on this market trade today. And on top of that, it's hard to believe that next week we're already jumping into the month of February. But we're going to look at what's going on with China. That's probably a big portion of what this market trade's been focused on. So is but what's happening with this on again, off again weather out of Brazil. We'll also take a look at what the funds mean to all of this and the crush investment and those crush numbers. Stick around, folks. A lot to happen on today's episode coming up after this.
Meet the champions of innovation in the heart of Nebraska. They're not just farmers, and they nurture more than just crops, pushing boundaries and turning challenges into opportunities. They trade knowledge and know-how, and their dedication doesn't end at harvest. It's in your every bite and every drive. The future of food, fuel, and fiber, and the future of Nebraska starts right here.
Welcome back. As you can see, joining us, Sam Hudson. He's with Cornbelt Marketing, and Mike Zuzolo, Global Commodity Analytics. And gentlemen, to say that it was a crazy, fun trading week, I think might be just putting it mildly. Even though we ended up finishing with a lot of negativity feels in this grain complex, the shining star was the livestock. And we know that a lot of producers continue to struggle and dig out from these snowstorms and are going to welcome some much warmer temperatures. But maybe these snowstorms came to an advantage to them. And I kind of wanted to start out there because we saw a monster trade in the fed cattle market and many producers that decided, hey, I'm going to hold off shipping these cattle, get some more bloom on them, and see if I can get higher money next week. Mike, let's start out with you. What's your thoughts?
Yeah, I mean, this, I think, is a great example of what I've been trying to educate this winter with producers, with ranchers and farmers about funds versus fundamentals, Susan, in the cattle market and the hog market to a lesser degree. But the cattle and feeders especially had the funds and the fundamentals both going with them and for them as tailwinds. And the funds were very happy after having, liquidated a lot of their long positions the past 3 to 6 weeks. Very happy to see a breakout from several chart technical points. And I think that was helped by the fact that we saw the tighter cold storage numbers for beef. We saw very strong weekly beef export sales, China being the number 2 buyer again. We've had the weather. We've had some issues out there in the cattle markets and the cash that have supported the fundamentals. And that got the funds underneath it. And I would say on a weekly closing basis, is there a common denominator between fat cattle being about 5% and the corn being about even on the week? I think that common denominator is the fact that the Chinese stimulus didn't work in the grain markets because it didn't really work in the Asian markets at the end of the week. And so the corn bulls jumped back out. Cattle bulls didn't need to because they had the supply-demand fundamentals underneath them.
Definitely going to make for an interesting ride when the markets reopen again on Monday.
Yeah, and I think this is where Wednesday we have that biannual cattle inventory report. And for me personally, if I've got the cattlemen staring at 184, 185 April fats, I'll probably get some puts in place, some bought puts in place, knowing there's a gap up around 188, 189. But I want to lock in profit in 24 and not get caught up in trying to pick highs and lows.
Sam, we've been talking about this January report, what feels like since last January. A lot of anticipation of these numbers. Do you see any surprises that we might come see next week?
Not specifically. I think, the fact that we had such a hangover from that October, November, data sets and the market has really digested and pushed through all of that. We mentioned the weather and the fact that we've finally gotten a little bit of a reason for premium, and it really came at a great time. As Mike mentioned, we've had a pretty sizable amount of short open interest in the feeder cattle by the funds there, and with really kind of a ceiling opened up here and a lot of fodder for some good cash trade. They just don't really want to hang on to it. And when you look at it, really spreads could still continue to appreciate here on the front end. But I also agree with his comments. I think, we've come pretty far here in a relatively short amount of time. Doesn't mean we can't still see some upside here as we get into spring, summer, but the economy is going to have a big thing to say about that. Interest rates all with it. And so I think this is a good opportunity for hedgers to at least take a look at what they've got out there for risk exposure.
So speaking of these spreads, $60 to $90 hogs in a few weeks. Sam, what's your takeaway?
You mentioned, this Chinese trade and just, willingness to keep markets down. And I think they just kind of found an area of fair value as you move forward into this first and second quarter. When you look at the spreads here on the front end, still not real positive. And so I think as we got June up to near the highs today, same thing as the cattle market. I think it's an opportunity to take a look at the hedging side of things and at least see what you've got for exposure to get through this next 30 to 45 days and see how the rest of these outside markets transpire and if they provide any more influence.
All right, you guys have both brought up China in two separate occasions here. Let's talk about what's going on with China and why the U.S. can't seem to compete to get their business. Mike, we'll start with you.
Yeah, and this is a tough one because this is where we're going to have to, I think, split out the investor demand in terms of the funds and why they're not buying the grains right now, and the fear in the grain markets that we're going to go lower because China is going to export deflation because they're in deflation. And a lot of people in the financial markets right now, Susan, talking about China is the new Japan of the 1990s, and we're going to have deflationary commodity prices. This week, we saw a very strong sentiment change by the government in China that they wanted to put a floor in their stock market. And the People's Bank of China has said now that they've put in about $1 trillion US. That's going to be about 5-6% of their GDP on a $17-18 trillion economy to try and stimulate their economy. They've essentially said we're putting a floor in our markets. Does the market in the United States and the West buy into that? That's the investor demand that I think is very optimistic, and maybe green shoots are starting to form there. I think the next 2 weeks will tell us a lot. The Hong Kong market, the Chinese currency, those two things are two of the biggest things I'll be watching, not only Sunday night, but in the next 2 weeks, and especially as we close out the month of January. Totally separate and away from the supply-demand fundamentals.
What about for you, Sam?
Yeah, I tend to agree with exactly what Mike said. And the grand scheme of things, at the end of the day, you still have to watch what they do, not versus really what they say. And as far as that stimulus is concerned, it hasn't really hit the U.S. table a whole heck of a lot. But when you look at their general import data on corn, soybeans, and wheat, we saw some pretty dramatic increases year over year on what they're still buying. They're just not getting it from us. And if they were the same price for us in South America, they'd choose them over us. At this point, they're cheaper. And so there's just an easy avenue for them to continue to buy from them. And this weather over the next 45 to 60 days, I think really helps influence that, because as we finish off the safrinha crop and get a pretty good start here on the Argentina crop, if there's evidence that there's not going to be any shortages, then, we may have to auction off some of these old crop supplies from last year just to make space for harvest.
What about your crush numbers? Sam, you said it's kind of something we need to really be keeping a close eye on.
It is. We've continued to set record monthly numbers. I don't think that's going to be, changing here moving forward as we continue to increase our crush capacity. But finding the, general pathways for these byproducts, for the meal, for the oil, so much has been made about this biodiesel program and the biofuels in general. But we all know, with evidence from the ethanol market specifically, what the government can do to throttle that or not throttle that. So the regulation, the gradient scales around the globe, those are all going to pan in or kind of filter into what is and is not possible there. And I think that's going to add up to a pretty clunky, mechanism as far as unrolling and all of that. And I think that could create some good and some bad. But right now, with the uncertainty and the fact that we've got this buffer on supplies around the world, it's been nothing but bad and kind of a headwind for markets in general when you get meal and oil continuing to make weekly lows.
What do you see, Mike, with this crush and how it's, especially as you talk to growers and you've spent some time traveling here in the last week or so?
Yeah, I couldn't agree with Sam more. I mean, the 350 level was violated in lead month meal, and I think that was the first weekly close below 350, going all the way back to early November of 2021. And when we talk about the Brazilian soybean price and the basis slippage there this past week, we're talking about $415 a ton in Paranagua compared to $475, $480 here at the Gulf, Susan. And so if we've got a bad crop, and Sam, I think is 100% right about the weather, and I think even the middle of the middle of February is going to tell us a lot, because there are still drought areas out there, but they're supposed to get relief by like the 8th or 9th of February. But if we are going to see a tight crop and a short crop in Brazil, you've got to think that Paranagua price would start coming up and going through the Argentine price at this point and being a lot more selective about taking on new exports. So that's going to be the key for me. And I do feel like the pork and bean trade is a very nervous trade. In other words, the fundamentals underneath soybeans, the fundamentals underneath the hogs, if China is not going to come out of this deflationary hit that they're taking right now, I'm really nervous about the premiums in both soybeans and hogs in relation to corn and wheat and cattle.
So as you say that, Mike, should we, when I say we, those growers and producers out there, should we be changing our marketing plans or at least the thought process of how we're going to look at the rest of 24?
Yeah, and I talked to a great friend of mine, a client that's been with me for many, many years in the central part of the Corn Belt, and he could do $40 better an acre on soybeans, cut his cost of production in half by doing soybeans by jumping out of rotation. But he said, I just love to plant corn. I think that's the big discussion here in 2024 for the United States. And I would just add this. If you can't hold these recent January report day lows in soybeans, I'm really nervous about another big wave down in the soy. So again, like the cattle, I wouldn't be afraid to put a floor underneath me if that 1201, 1205 level can't hold on lead month soybeans.
Sam, what about the Eastern Corn Belt world? What do you think when it comes to marketing this?
There's not a whole lot that's going to bust guys around here out of their typical crop rotation. But up until last several weeks, where soybeans have made a little bit of a recovery versus corn, we've actually, for customers out west, have been hearing more about corn penciling better despite the higher costs. So unless the guy's pinched financially, I think you're going to kind of see a mix. And I'm honestly more interested in what total acres are going to look like rather than the split between these two. I think a lot could change between now and June, final numbers. But either way, again, with these buffers we have around the globe on supply, you have to create a narrative where we can erase some of that in a quick amount of time. And the first way to do that would be have lower than expected acreage or even get a wet spring. It's going to be difficult to build risk premium with dry weather, at least to what we've seen here over the last two weather cycles in both the northern and southern hemisphere.
Well, gentlemen, a lot can change between now and when those planters hit the dirt for the first time in 24 here in the States.
Yeah, that's right. And they can. And I, the break evens are lower. It's providing a little bit of relief. But if you see where you've got margins and you're confident where you can pencil those in, option volatility is relatively low to make a sale and go out and buy some calls isn't the worst case scenario type of deal if you have to know where you stand. But make sure you don't end up in the same situation as a lot of people found themselves in this year without any forward sales in place.
Yep. Mike, your final thoughts for you on that?
I think the big thing to kind of dovetail on that, Susan, is the idea that if the month of February is going to be so important from South American weather, we'll get the agriculture baseline numbers to Sam's point about total principal crop acres. And then we'll get the baseline numbers for the crop insurance and what's going to provide the biggest safety net for the producers on row crops. So I think these next 2 to 3 weeks, I think producers really need to elevate their marketing plan this next 2 to 3 weeks if they can.
All right, gentlemen, thank you so much for joining us this week. Of course, we'd like to remind you commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Nebraska Soybean Board Weekly Market Roundup.